Hey, what's going on, everyone? We have another live day of trading here. It looks like it's going to be a green day for today. The markets went up yesterday as President Trump announced guidelines for how the economy can actually finally reopen. And it seems like the market kind of took that news a little bit too well, as the stocks have just went up and up. And it went up a bit more than I was expecting it to. And that always makes finding stocks at a discount a little bit harder when everyone's sentiment is just so optimistic. It also looks like some companies are having promising results testing drugs to treat the C19. We need that sooner than later, as unemployment rates are now hovering around 15%. And that's really amazing, because just keep in mind that the rate was at record lows of 3.5% just in February. So in just in 2 months, it's went up over 12%. And obviously we need that situation to be resolved soon as possible. So today I have 2 stocks that I'm going to be purchasing, and don't worry, I've methodically placed them throughout the portfolio so you guys can see how my other positions are doing before I talk more in depth about the stocks that I'm buying. Also, huge congratulations to my daughter's dividend investing journey, who was the only person to get my last trivia question right, which was, who is the only black NBA owner? And that would be the GOAT, Michael Jordan, who owns his hometown team, the Charlotte Hornets, who have also been a laughingstock ever since he's owned them. So let's get into the portfolio here. We have Johnson & Johnson and JP Morgan. I just made a video about how they had their earnings. Johnson & Johnson's was pretty good. JP Morgan's was a bit more mediocre, and a lot of people are worried about how it's going to be faring here in the future. Then we have Apple trading at $278. Surprised to see the stock down, especially because the rest of the market seems to be up, and it usually trades in line with the market. But again, there's going to be some huge volatility in the markets on the last day of the month here on April 30th, when Apple, a $1 trillion company, announces its earnings. Apple also was in the news. They announced like some sort of new version of a phone. I think the last thing on people's mind is buying a new phone at this point, but obviously Apple always needs to be innovative and bringing out new products. I personally won't be buying it because my phone works just fine, but maybe someday in the future. Then we have Pepsi trading at $136. It's only been down 2% in the last 3 months, so that's a pretty recession-proof and C19-proof stock there. Applied Materials have finally been able to get back up on this position. I was able to average down on some shares in the past couple of weeks, so glad to see that back in the green. Nvidia, this has just been on a complete roller coaster here. As you guys can see, it's been fluctuating all over the place in the last year. I'm currently at the time up on this position, but that's probably going to change as the market continues to fluctuate. All right, now the next stock here is MasterCard, and this is the first stock I wanted to talk more about today. Now, it's been downgraded by 2 analysts, and now that's a phrase you don't hear very often, because this is not a stock that gets downgraded very often. I've been following this stock for years, and now this is one that you really don't get many chances at buying on dip opportunities. It's trading at around 35 points lower than it was from its 200-day moving average, and almost 100 points off its 52-week high. Now, just because it's trading lower than those arbitrary time periods, that doesn't automatically mean it's a good price right now. But some of the reason analysts have been downgrading the stock are just for such short-term reasons. They cite sluggish travel, spending with airlines, and hotels as the primary reason. So people aren't going to be going on business trips. They're not going to be traveling for recreation. A lot of activities that you would normally spend using your credit card, which every time you swipe that card, and if it happens to be a MasterCard one, MasterCard does get a small little sliver of that money. So anytime there's less discretionary spending in general, especially now that most of us are locked in our homes, that's going to be affecting MasterCard. There's less transactions happening. But really, once that C19 vaccine comes out, whenever that might be, I expect business to go back to normal, and I expect MasterCard to continue to be growing that revenue. And of course, there's going to be a lot of health effects, both physically and mentally, from this prolonged hibernation that we're seeing right now. But looking 5 to 10 years out, I do see MasterCard only continuing to increase its revenues. There's plenty of room for growth here as it actually trails Visa in market share. They can easily capitalize on some emerging markets around the world where cash still makes up the majority of the transactions. Even in times like this, online purchases, whether that's on Amazon or Uber Eats, Cards are still being used, whether or not they're being swiped. Whether you do that online, MasterCard is still getting a little bit of that cut. And since MasterCard is not a lender, they don't carry on any of the risks that a normal lender would have to take on. And they also ended 2019 with $7.5 billion of cash on hand. And that's going to be enough to easily continue to be able to pay their dividends to shareholders of just over $1 billion. So for all those reasons, I really see MasterCard as an intriguing stock to continue to own here. I already own 5 positions, down for the time being on it, but this is a great opportunity to get my average cost down. So I'm going to buy another share of MasterCard here. I feel like I'm on Shark Tank and I have to kind of persuade myself to be buying these stocks. So obviously don't want to be doing what I just did. We'll set a limit price of what it's trading for at $256.61. And we'll just buy 1 share, and it looks like we should be good to go here. So whenever that gets finished, I will now own 6 shares of it. And as you can see, my average cost went down about $4, it looks like. Also, if you guys are really liking this content, please be sure to subscribe to the channel and hit that like button. If we can get at least 30 likes on this video within the first 24 hours of it coming out, I will put out a video of all the dividends I received in the month of March, which is actually the largest amount of dividends that I've ever received in my life. So if you guys want to see that, make sure to hit that like button. It's all you got to do, and that video will be coming soon. Okay, so moving down, we have Medtronic. Finally glad to see this stock doing well, up 6% today. Waste Management. Now this is another one that probably came up in the runner-up position for me to buy this week. It is still down from its peak here in the last 3 months, much like most of these other stocks, but just like MasterCard, better here. Microsoft, another trillion-dollar company, and they will also be reporting earnings on the penultimate day of this month here. Then we have UNH here. This is another one that's done very well. It's had a positive earnings report and for Q1 of 2020, as you guys can see there. Then we have Visa. It's probably not cheap by any means, but I still think it's at a bargain here at 167. When we look at its peak, it was around 213. So for it to be trading at 167, obviously it's going to be hurt in the long run as people don't process as many payments, but it should be, again, another bull as it has been in the last 5 years going forward once all this is cleared up. Then we have Boeing, which is at 151. This has been another volatile stock. I've been kind of using them as a metaphor for companies that use their cash foolishly. Then we have AbbVie here at 83.16. Got an upcoming dividend payment for them of $7.08. Now, the company that they actually launched off of, Abbott Laboratories, has been doing a lot of work here in terms of how to be testing for the C19. So glad to see that. Then we have Store. This is another one that I've been buying a lot of shares of recently. There's been obviously a lot of risk of tenants not being able to pay landlords. And since Store is a REIT, that's obviously going to be hurting them. But most of these companies, they should be able to survive here as long as this doesn't last that much longer. Maybe once we start getting into June, that's when I think more of these companies would be at more of a risk. But again, it's all speculation at this point. Coca-Cola, another safe investment here at $48. A utilities company can't get much better than that in terms of safety as a regulated monopoly. Then we have AT&T trading at $30.94, which I think is pretty cheap for them. I normally don't see them in the low 30s range. It's more of the mid 30s. So I'm down a little bit on this position, and looks like I also have an upcoming dividend from them as well. Then we have Prudential. This is another one that I got in at some really great prices. Minimize my risk when I buy it at when it's already down like 50%. So I'm up pretty big on this position in a pretty short amount of time. Obviously, this is more of an ancillary position. We'll probably only be adding to it from time to time. Then we have my 2 oil companies here in Shell and ExxonMobil. So down pretty big on both of these positions. We'll continue to be holding them for the long run, but people's sentiment on oil doesn't seem to be as bullish as it was just a couple of years ago, as most of us agree now that the future probably is electric cars, but oil is used for a lot more than just cars, and that's why I think they'll always still be around. It's going to be tough to count these guys out, especially if they start to diversify in terms of how they provide energy. I know Shell is actually provides about 5% of total electricity in the United Kingdom. So if they continue to do that, if they obviously when you drive an electric car, you need to be able to charge it somewhere. So Shell and ExxonMobil, that's opportunities for them to kind of their business in another route. Obviously, electricity is probably a lot cheaper than oil, but it still gives them some sort of relevancy here as we continue to move on into the next decade. Then we have Southern, another utility company. Pfizer, glad to see them up. Intel, it's been pretty sluggish here. Not much has been happening for the last 3 months for them. McDonald's been on the news for all the wrong reasons. They recently had to drop their sponsorship of Kyle Larson in NASCAR because of insensitive racist language that he used during a live stream. Just a bonehead move. Obviously, a sponsor in NASCAR is everything. McDonald's was literally paying his race team millions of dollars to put their logos on that car. And obviously, they don't want to be representing somebody who uses that sort of language. So McDonald's, luckily, is still staying with the team. A sponsor just means so much in NASCAR. That was kind of my plug to be talking about NASCAR. Obviously, would hope to be talking in better situations than that one. Then we have Starbucks here. Now, recently, Luckin Coffee has been exposed as a fraud. It's a company based in China.
Best surprise of the century.
And they had actually been artificially cooking their books and increasing revenues artificially. And that company is no longer even being traded on brokerages. It's sad because a lot of people lost a lot of money. Anytime that, a company commits fraud like that, it's basically, it's a lose-lose situation for everyone involved. But at the same time, this will give Starbucks more opportunity to continue getting market share in China, where they've been concentrating a lot of their growth efforts at. It's going to be tough still for Starbucks. I feel like only a few of them that I've seen actually have the drive-through, whether it's in a mall or just somewhere that it's probably still closed for most of the general public. But once that gets reopened, Starbucks would continue to be an industry leader. We have General Mills doing great here during the last 3 months, is actually up 11%. I'm glad to be holding on to such a defensive stock like General Mills. Equinix, another company that's been doing very well here, up 15% in the last 3 months. Seems like more and more people are now, I've seen a lot of people been talking about these data center REITs. People long enough, I think, finally to see that there's a lot of value in these companies. Then we have Realty Income here, trading at $51.49. So this is one that's also been hurt pretty big for the same reasons as Store. People are afraid that tenants won't be able to pay rent. And again, this is, such a short-term problem, but we don't know how long this pandemic is going to last and when businesses are finally going to get back open. So in normal times, this wouldn't be such a big deal, but this is really once in a lifetime risk here. So I still think will be fine in the long run. I'll probably nibble more on it if it gets back in the 40s range. Then we have NRZ, another mortgage REIT, been getting hit pretty hard here recently. Then we have Bank of America at $23, Disney at $105. Disney, they're not really making a lot of money from all their theme parks not even being able to operate. Hollywood has been basically shut down, so they haven't been able to make movies or content. Luckily, they do still have Disney Plus. Then we have 3M here at $145.27. Down a little bit on this position as well. Been on the news a lot for how they've been handling the N95 masks, but it seems like they're back on the good side of President Trump. Procter & Gamble, this is another great defensive stock that should only be benefiting from people hoarding toilet paper, among other common household goods, as if they were gold. Then we got the two railroad stocks here. I was thinking of buying more Union Pacific, but I want to see it down in maybe the 130s range before I grab some more. All right, the second stock I'll be talking about today is Medical Properties Trust. Now, you guys have seen this stock before in my portfolio. It's a REIT. It trades right now at a 6.4% dividend yield, and this is something that I'm definitely licking my lips about. This is a company that should be able to continue paying its dividend, as unfortunately, hospitals are more in need now than ever before. And MPW, luckily, it has long-term net leases with hospitals. It's actually the second largest non-governmental owner of hospital beds in America. And also about 1/3 of its business is being done overseas, mainly in Europe. And this is a defensive sector. We're always going to be needing hospitals. There's so much regulation when it comes to hospitals, and having tenants in triple net lease agreements, that's really going to pay off for Medical Properties Trust here. Also, hospitals got over $100 billion in emergency aid from the government stimulus package. Hospitals also got to deduct 50% of their payroll taxes, so this frees up more money to pay for other expenses such as rent. I know this isn't really the proper way to be making money, but often with investing, it's mixing emotions, morals, and ethics. And at the end of the day, somebody has to be playing landlord here, and people need money to be able to survive. And luckily, I personally think that furnishing the land that hospitals do work on, that is a beneficial service. So again, I'm not trying to capitalize on any tragedies like this, but I do think this is a great company to be owning, and I do think it's providing a service for the betterment of the world at the end of the day. So I'm actually going to be doubling my position on this. So I know it might sound a little bit crazy, but that's only going to be about $400. So 23 shares right now, and I'm going to be buying another 23 shares. So let's buy this in a limit order for $17, and we will put 23 shares. It's going to cost about $391, but should be a great long-term play here. So once that gets through, I will then own 46 shares of Medical Properties Trust. Then we have Verizon at 58.17. They've not done too badly here the last 3 months. Chubb. Obviously, these insurance companies are getting hit a little bit harder. SPHD, which pretends to be low volatility and high dividend. The high dividend may be true, but low volatility is anything but that. So once this gets back to my average cost, I'm probably going to sell it and buy another ETF. So that's going to be it for today, guys, whenever this final transaction gets through here. All right, now it looks like my 46 shares of MPW are finally in, $782 in equity, and makes up 3% of my portfolio. So not too terrible there. So let me know what you guys think about the portfolio, what stocks you guys are buying, how long do you guys think this will last even, and do you guys think that real estate is at a bargain right now? I know a lot of these REITs, they're facing a lot of scrutiny based on if tenants are going to be able to pay or not. So could be a great contrarian pick there, but let me know in the comments what you guys are thinking. As always, guys, don't forget to hit that like button and subscribe to the channel for more.